Well, good evening, ladies and gentlemen. I wanted to go over something here that's very interesting. And yeah, let's try it here too. So see where this hit a low, where this one hit a low. I'm just sketching out something. It's actually overshot on this one. Yeah, so there's a way to potentially read the trajectory of a low, right? And it's somewhere between where the first high comes in. So this one, like it didn't, in 2021, it did not, it went sideways. It didn't like a rally right up off the bottom, like stocks sometimes do, right? They kind of like this, kind of you have like a first leg. It didn't have that till over here. But if you zoom way in, I'm telling you, not everything's hocus pocus, mumbo jumbo. So what I'm trying to see is where it hit this low, and line it up, right? And look, and then where it hit its first kind of high. It didn't rally and hit a high. And then look where the final high came in. So you're measuring the trajectory of the algo, where it hit its first low exactly. It has to be dead on. So I'm just going to go over this and give you price targets based on this. We're going to follow the same thing. Look, AMC did all this crap, and then it went right to where that line is pointing, where that low is, and then its first kind of high. And then that was the first leg in 2021. Now, if you do the same thing here, don't let me blow your mind too much. No, I'm not the first person that does this either, and I've done this for a while. And look how that see how that lines up with that first kind of high, just like we had over there. And then look, it actually went higher than that. So all I did is measure the final low and then the top of the next kind of candle. And then it actually happened to match the top of this candle as well. But I didn't line it up that way. So let's continue on. So for 2024, could you say the same thing? Can I just do that randomly anywhere? It's on a major low that it works. It will also work with some other stuff, but there's certain parameters you need to have. And I'm showing you that. So on this one, if I took this major low right here, and then took that first, see how this one was different? It didn't just like hit a low and go sideways. It hit a low and like shot up and then went sideways. So I'm taking it off the tip of that first kind of reversal bar, right? It's a complex thing. And then it, what? Told you how high it's going. So again, if this would have went sideways and it had a secondary like little candle here and I just measured the top of that secondary, but it did not. So now I'm taking it off of this candle tip, and it's going right to there. Let's look at it closer. So this low right to the pinpoint, this tip, yeah, if you would have pointed it up here, that's just like stocks just don't go that straight up. It's got to be within reason. And then if I take it right, sometimes it won't go. Yeah, I'm trying to get it right on that tip. That's good enough. So your first reversal bar, right? So let's go back and look at the other ones and just see the comparison. But what happened is, remember on that other one, the stock kind of came and hit low down here first and then turned around and hit up high. So let's compare them. Now that we've kind of done three, let's go back to this one. And then we'll do today's one last. So again, see how it's like a major like reversal bar, like a hammer that I'm taking it off of? And then there's a hammer low here, and then if there was a rally and then some type, there's no reversal bar here. This is one, but it's not, you know what I mean? These are powerful candles. This is that's one of the most powerful candles you could ever have. And that's secondary at the bottom to have a super tight hammer like this in severe price depression with another hammer following, and that's a shooting star. That is like huge warning, right? And then you see this little rallying and stuff, and then all of a sudden, wham, right? It's a huge warning. But what I did is I took that lowest tip to that reversal bar looking tip where they kept shorting it, even though you're at the bottom, they had to short that stick all the way down, and they shorted all the way up. You could tell. All these days are red. And it was diluted on. Maybe that's part of it. So with AMC, whether the shorting or is being diluted during the rally, or both, it's a lot of times it's both. But here, what did we take it off, right? We took it off of that final low, and then that first kind of hammer candle there, and then it ended up matching this hammer candle. So this gave you your second clue. Then you tagged that, and then you pushed off of it, and then you went right to the top, right? So that it traded here and rejected, and then it went straight up and hit that and rejected, and then it went straight up and hit that, then it rejected. So it's got to make sense. I mean, there's other ways to figure this that are not as, but for AMC, I kind of like this way because it's played out. So again, there's that same thing, like that shooting star, the hammer, and you're going right up through the tip of that very powerful candle. So if it caused a reversal here, then it caused a reversal here. That's what you're kind of tracking. Where is it going to reverse? You're not trying to say how high is it going to go, because it can go above this, but it's going to reverse on that or near that. Just like you saw in one of these instances, it reversed near that. So let's just take a random section of chart and let's try this just on a random section of chart. Let's just grab this. Let's just say grab the most nasty reversible right there. That is nasty. This little hammer, those super tight candles, you know why that's nasty? Because it came back here and hit that. You could see it was here, it tagged that, and then it came back and re-hit that. So and that's not perfectly at the bottom of there. Yeah, you could say, if you're using this, you can use it as a secondary tool, right? It's not always like 100%, but it can be another thing that, gives you an idea. So let's take off these stupid fractals things. I was playing with that. But let's just say, well, currently, where's AMC? What's its trajectory from the low? Where did it reject? Look at that nasty hammer. See how that's nasty? And then it rejected down. See how from the low, it had that other secondary hammer here, but it rejected off this one. Boom. So let's see where that goes to today. You ready for it? So now you made all this structure, but you didn't hit this again. See what we could have done if we were having a small rally, guys. We could have just went whoop, boop, and then our rally would have been over here at $13. But if we're taking this historic version of trying to figure out the price target, that's worked in the past. Our price target could be up here. Just set 81 bucks. And I'm using the same method, guys. Same thing here. We went up that first thing, rejected with a hammer. You went up this first thing, rejected with a hammer. And let's pencil that in. So you go to our current day's price action, which is here. You post this right up here on your line you just made. And guess what? It says we can go to 110.71. And this also is, look, it's the trend line of the first wave up off the bottom. And you see a similarity. Watch when I look at them and look at this. See how I took this one over here, our last fake out high, and how they both cross up here? That's interesting, right? But there's something more interesting. See that one? I'm going to take that reversal. I can't do it this far out. That reversal along with this low, that nasty hammer. Or just that trend line high. Let's take these last two trend lines here. And look, it's not much difference. This was our last double reversal. So you went up here and it looked like a bottom, right? Then you hit this and then you had it look like, oh, we're going to rally, and then bam, no. So I'm taking this as a secondary confirmation up into that range, right? You could do it a third time. But the real one that matters to me, you're just trying to see like how many of these trajectories, these failed rallies, where do they point to? Well, this is the one that matters off the all-time low, and then that first, see that trend up? And see how we could have, if they weren't shorting us or whatever's going on, if everybody got bullish the stock, we could have just came up here and rallied to like $8. And then, that would have been over, right? Because what happens? You go up that first trend, and then you go sideways, and wherever you hit that second trend again, the rally's over, right? So here's the first trend off the lows, and we never came back and hit it and had a rally. We've been delayed. So what does that tell me? We can hit it way the frick up here. Historically, and then I took this second trajectory, and it almost matched. That's at 84. This is at 110. So I'm trying to get a regional view. This was our last rally before all-time lows. This was the last time you faked out. That's why it's so important to me as a rejection area up here. So can you come up to 84 and go up to 110? Yep. According to what we've done in the past, we can go right to 110. According to here, riddle me this. Why did we do it here? Why did we do it here? This was our first trend up, right? And then that first reversal bar rejected off this line. That's what I'm measuring, the tip of this rejection bar. And then guess what? We went sideways a few months and shot right into this line up here. And then the rally was done. So, look here in 2021, they're straight up. But if you spread them out, they don't look as straight up, but they're still straight up. What did I measure? That final low with this first rejection bar. You never rallied here and hit it. You could have just rallied to 28 and been done, right? But you went sideways right off. You made that rally and made a rejection bar right away. Got stuffed, whatever. They wouldn't let you rally. They still wouldn't let you rally. Still fighting you. And then boom, right to the top. Hit that line right there. Look how that is. I mean, does that not blow your mind? And I've used this in the past. I just was waiting to do it because. So realistically, that was our first rally, right? Attempt at a rally off this low, and it got stuffed, and then the stock remained compressed, and then boom, it jumped off this moving average, remained compressed. They let it rally a little bit, and then never let it rally just to hit that line. So what did it do? It kept going sideways, and then boom, it hit that line. It jumped to that line. Wild, right? So what qualifies where it goes off just two candles? If they're two powerful candles together, very powerful, and then you never come back and hit the line. And if it's two straight up, unbelievable. If you would have measured this and said, no way, this thing's going up to here. Well, it did. And look at the same thing here on these two. I measured the bottom and the first of that one, and look what it did. It came up here and tagged it. So that's kind of what we have now, is we have a trend up, and you prove the tip of the first trend leg here, and then you went sideways. and then you came up on the second trend leg, and you still didn't hit this trajectory line. You went sideways, and then you gapped above it, right? Crazy. Let's go back over here and just make sure we're looking at this the right way. Can that work on a downtrend? Well, here was your final high, just kind of like a final low, right? And look at your rejection bar here. It's pretty close. You could say, where is the, oh, there's the cross. The cross is right there. So yeah, it does. It works as a trajectory here. That was your first trend down, and then you rejected sideways, and then you followed through. And then you hit that trend down. Get it? Pretty crazy, is it not? Now you guys are going to all break out your ruler. See how this is like one of the most powerful candlesticks you could ever come across of, and where it's located at. So when you see these certain candles, guys, and you start learning to identify them, this was a massive reversal warning. You gapped up and then slammed down, and then that's just brutal. Whenever a stock does this, it was way down here. It went way up here, slammed down with this, what do you call it, Harami cross, whatever it is. So you take the line from that cross, you measure it really to this bottom of this stick, I would think would be, see how it's catching that first trend down, and then you're reversing off that trend, and it's pretty much showing you your trend down. Maybe off a little bit on this if I do it that way, but if I take it from that body, the body of that hammer, right where the cross is here, the hammer area, right where that cross is up here, gives you a better idea, right? Would have saved you a lot of trouble down here. And then that ended up being your trend line, and then when you broke through it, you went up. And then you went back down, you broke through it, you kind of went up, right? Pretty interesting, is it not? And then you could even have taken this one. Still don't believe me? Okay, so you made a high, but you had no powerful candles. But you could say this was a hammer. You could say your first trend line was here, right? Your first trend line, then you false broke and then fell. You just wound down this whole trend line. As soon as you came inside of it, you had a rally. So that was your median line, your downtrend line. That's all that matters, right? You just freaking fell like a rock down that line. But if you took it from the high, it feels backwards me doing it on the downtrends. It just feels backwards. But here's your, you got to go with the crosses and the downtrends. Like we did the last time. See right in the middle of that cross? Let's take it here. Let's just make it a downtrend. And then see over here, let's take it right in the middle of this cross. Right in the middle of this cross. Okay. See how it's right in the middle of that cross, and then it's right at the bottom of the green line. So that was showing you what your next downtrend is. It's going all the way to you. So I did that right on that cross, right underneath. That was your low. And now look at that. We've drawn a downtrend channel that dishonored, pretty much. False broke. So what did it have to do if you're counting? 1 test, 2 tests, 3 tests on the top of this triangle, right? 1 test, 2 tests, 3 tests on the bottom of this falling wedge. And then what did it do? What do I always say? Once you have 3 tests on either side, you can break and back test and go. You can leave that falling wedge, whatever, behind, right? So let's go back to here. Now taking it from that low and to the tip of this thing, and then right to the tip of that kind of, this was the rally high. That's what matters, right? The rally high of this first leg. and it won't line up perfectly. It won't let me get it on the tip. So that's as close as I get, but it's going kind of where the cross is and where the low was. And what's it showing you? It's showing you a roundabout area where the high is, right? Pretty good. Or, there's another way to do it. This is more conservative. You just take the trajectory of the first bunch of tips. All these tips. So you can see you overshot that. That's more conservative. But the first leg off the bottom, you take the tips. See that tip, that tip, and then see how those tips lining those up. See how all these tips hit, and then it gives you a more conservative target. But if you want the meaner target, go to the tip where it hits the low, go to the ugliest reversal bar on here, and there you go. Gives you an idea where your high is going to be. We just popped off the bottom, it rejected on this line, even though nobody ever saw this line. That was its first reversal rejection area. Made a winding bottom, whatever you want to call it, double bottom after that, and then just rocketed right to that line, and it was over. So let's check our work again. Let's look at this one. From the cross. Yeah, I would take that. That's nasty. That's a powerful candle. Take that cross to this tip maybe. And let's do it blindly. And then let's look to that tip or the red bar top. You could say literally it rejected off here, right? That tip. See where that ends up. In today's terms, what do you know, guys? It just crossed 110, 112. And I didn't try to match this, guys. So I just gave you my most bearish targets and views. If this stock follows these trajectories that I just plotted for you live, and I went over how it's followed that trajectory over and over again. We traded sideways under this line. In today's terms, as of, let's look at the price today and make sure it's lined up with that trajectory. So, this trajectory lines up on Wednesday, August 26th. So let's pop in that line, guys. Let's pop in that line. And does that mean we're going to hit that on Wednesday, August 26th? I don't know, guys. If we did like 2021, you did 1 day rally, 2 day rally, and you gapped up to the highs the third day. See how big this, and what I say about AMC always trading backwards, guys, is because a normal stock, I mean, we're diluted and all that stuff. But see how this is like a rising wedge, this thing that I just plotted. A normal stock kind of goes up, a rising wedge and does like crap, right? It rallies and then it comes over here and then it goes up and it gets to the top and then it just falls off, right? The game over. But AMC's got a thing that it does backwards. It never plays around, it never goes up. But one day, it just shoots right to the top of this rising wedge that it was never allowed to trade in the first place, right? And they keep getting steeper, right? Because do you see anybody out there that's saying you're going to go to 114.47? Because I took some algo trajectories for you and said all these numbers I have probably don't mean crap. If we just start ripping to like 820, 16, 30, 40, 114 by Wednesday, I would be impressed. I'd be impressed. 114 by Wednesday. Now let's go back and let's see if the timing works. Well, look, when this line got up to this level and then the price finally hit a low and took off, it met that line. So yeah, this is a timing line as well. So, okay, you want more ideas, more proof, more, okay, let me show you something else. Let's take the secondary trajectories for these zones. Okay, so remember how those two cross, these two, like that rising wedge that I just showed you. Well, let's take this low. Let's put it to this high. Watch. Similar. See how that matched up? But let's make sure it's right. See? Let's fix it. It should be this low. And then we'd actually take it off of, is that how I did the other one? I took it where it made the last biggest high, right? And put it right on that cross. See that nasty cross right there, that tiny cross? See this gap down that happened that nobody ever paid attention to, but later on it filled that gap down? See, there's a gap. There's a gap, untested area in this chart right here with that wick coming down, and it came and wrapped around and hit it. It was up here and it gapped down. This is an outside day. That's what I'm talking about. You see how it was up here and it just wicked down and just went straight down here? This is an outside when it fell like that. So you came back later and tagged it. And then it made that trajectory, right? If you take it from the red to the red, it's going to do it better. The red falling here, the red candle bottom to that outside, that wick, that nasty. I'll show you. Look how nasty that crap is, dude. See how it's up here on top of like this channel that we just drew? It's just like hanging here like, oh, I broke out and I back tested, and then wham, it got slammed down. That's bear greed, guys. What happens when you have bear greed? Bulls pay you back right over here. So see how that's an outside day up, and then it took an outside day down, and then this boom, boom, hit and filled that area. That's a powerful candle, and it was on top of this trend line. It was a false break. So then what did you do? You went up there and you retested that candle. It's interesting. Let's go over more of doing the dual technique where you're not only taking one, but you're trying to take that secondary like trajectory to verify your timing. Look at these out straight up. They look. So doing that, so you could even go something like over here. And I don't even want to see that, right? I don't want to see that. I want to see if I can hit that same target from something over here. Trust me, you'll never figure this out. But so look how nasty that candle is, right? And pick another nasty one. That one's pretty nasty right there. Let's try those two. This is a big warning candle. And then that's a nasty. Let's try those. See if they mean anything. That's a nasty. Put it right through that cross right there. Whoops, a little higher. That's a nasty stretch right here. That's nasty because you went down here and you gapped up, and then you rejected and you pretty much hit all time. Let's see if that means anything. It's pretty close. It's pretty close. Just the nasty zone, and then you went up and retagged that nasty zone. So it's not far off. And that's basically what you're doing is you're seeing the biggest, bearish nastiness happen. Remember originally I was going to take this one. And that one's dead on. So if you go through, look at that. See how that line is tested all the way back and forth, back and forth, back and forth, back and forth, all the way to here. And it's a rejection line here. And then it's a rejection line here. Let's go back. Let's recheck our stuff and make sure we've got a rejection line. Yes, we do. We don't have a lot of competing price action here, but I could take it from one more place to triple verify our current trajectory, right? Let's try to triple verify. Let's try to take another nasty projection line from somewhere. Let's see if we can even take it from way over here. That's a nasty little hammer. Powerful. That's a nasty little rejection line here. Let's see if that comes into play. I think that's too high. Let's see. Yeah, that's 330. You know what was nasty though? That I think that was really nasty was this fake rally. Let's take that one. That was nasty. This whole candle was nasty because it opened up here and went straight down. And that's a bunch of nastiness. Look how nasty all that crap is. Let's see how that one turns out. And that was on high volume too though. So that one's not too far off. But that might be our secondary target later on if we have a two-leg squeeze. That nastiness. We never really retested that nastiness. This was a whole bunch of nasty. You came up here, you rejected, shot straight down, and then you had a fake rally and crashed, basically. But that one is a bit higher. Wait, let's see, I got too many lines now. Yeah, that one comes in at, actually that one comes in at 190 right now. That nasty line. That is a nasty one. So 198.5 is a nasty, nasty line. Do we get there? I don't know about that. If you do a second leg later on, you might see how these two cross up here, 320, 302. So say we do, just go up and tag that nastiness from this thing here that we never were allowed to rally into and hit. Really what kind of pisses you off, right? You think like, why are they, how come we have all this great news? And we rallied 107% here. That was your trajectory line. And then it meets with this line. I really like the 114. I'm going to stick with that one. So this is my most bullish target, by the way. It's going to be 114.47. And now I have to clean up all these lines. But as you can see, there are a million ways to look at a chart, and there's a million ways to look at a launch off the bottom. And this way, double verified here at 114. Because the first way I verified it was just following this uptrend line and the same stuff I did on all the other charts, right? See that reversal hammer here? Boom. That's where we first reversed off our first rally. This day looked cool, and then that day was reversal. I took it from the low, the tip of the low, to the tip of that first reversal hammer. And then we could have done like some kind of, looked like kind of like a cup and handle. We could have just rallied to here. 725, no big deal. We wouldn't have rallied for a year, probably, or longer, or maybe a while, whatever it is. But we didn't do that. They never let us have an expansion. So what does a stock do when it gets treated that way? It expands immediately to the line. So if we did the same thing we've done in history, this thing's saying somewhere around Wednesday, August 26th, we can hit $114. I'm just giving you my top price target. I already gave you this is my most bullish version of AMC for the rep. It's not even bullish. It's just, we've done this same thing multiple times. Why wouldn't we do it this time? I just went through and showed you. Do I need to delete all these stupid numbers? Do I just need to look at right here? Does that mean we could just gap up to like 550 and then just start mooning? I don't know. But this was done the same way I showed you how all those can be done. And the same way I showed you that a lower trend line can be. Okay, let's do one more, just since you're still here. Actually, no, I'm tired, but like to find the all-time low, I'm sure I could have took a snapshot of a couple nasty lines, right? We could have took these lines. This nasty rejection up here, this nasty rejection here, and then guess where it meets is with your all-time low. Could have saved yourself all that trouble and just bought right here. Now that you're coming out of that all-time low, and you weren't able to have a secondary rally yet, because that's 100%. You could have just came here and done a second wave and made a 400% rally or something to $6. They wouldn't let you do it. They want you to go to 114.